Jim, do you think that we'll see the market sell off significantly if it is confirmed at some point in the next week that there won't be stimulus before the election, or just the hope that it will come at some point in the next few months? Is that enough?
You know, stimulus is going to happen, because if we don't make a decision on what's going to happen with forbearances, with evictions, with foreclosures, there's going to be some real pain in the marketplace. It could show up in some of these commercial mortgage-backed securities. It could show up in commercial real estate itself. It could show up with the banks. There could be some very, very serious pain if at some point we decide that we don't have a solution for these issues that are really out there. You just don't hear about them that much. The market has been, Michael's right, the market has been rallying on hopes of a stimulus selling off when you get that disappointment. It's the old Lucy and Charlie Brown in the football being pulled away all the time. But if you look at the volatility index, it's been cooling back off. And that does tell me the traders are not anticipating any major sell-off, either because of a stimulus disappointment or because of a possible hung jury on the election, which in my view is one of the real risks of the market and could create as much as a 10% sell-off if we don't know who won and we get another Bush-Gore type outcome where we're just waiting.
Jim, you mentioned the possibility of bankruptcies if we don't get stimulus. Do you think the banks have rallied too hard this week just on rates ticking up a bit, and if there isn't a stimulus that they'll suffer?
It's really interesting, the banking sector. And as you know, Wilfred, I haven't been real crazy about this sector just because I hadn't seen them moving yet. We're starting to see them move, and they broke out right at the same time, to your point, that the 10-year Treasury yield broke out above 80 basis points. And the real problem for the banks has been that the spreads have been too tight between the 2-year and the 10-year. Now they're starting to widen out. To your question, are they getting ahead of themselves? Well, if we don't get a stimulus deal and we don't decide what we're going to do with these things, then yes, there will be some pain back in that market, and in particular in those names. The other thing I thought was interesting, too, is that there's some bifurcation. You're not seeing breakouts on the major money center banks. What you're really seeing is the small cap financials. And there you can be a little more selective. There you can say, okay, how much exposure does this particular bank have? And you can start taking some ideas about who's good and who's not good if we don't get a deal. So it's a mixed bag. I'm not crazy about the sector yet, but I do think it's gotten more interesting.
Shepard Smith here. Thanks for watching CNBC on YouTube.